It's Wednesday, January 26, 2022. What a day of volatility. What a roller coaster ride we witnessed on Wall Street today. You talk about more uncertainty. All you had to do is watch these markets. It was absolutely incredible, the amount of volatility that took place today. And I want to recap on what happened today. And I may be a little bit all over the place, nothing in order here, but I want to get through this and just kind of talk about some of the highlights that I saw. Feel free to comment down below. Let me know your thoughts. But earlier today, the Dow was up over 500 points this morning. It finished in the red, down 130 points. The S&P was up 2%, finished down 0.3%. NASDAQ was up today, finished flat. But watching some of this stuff, it was like we were in fantasy land. All the cryptos were up, all markets up, everything was fine. And I'm going, what is happening here? I thought the Fed was coming out today. But that all changed as soon as Jerome Powell came out and started speaking. Jerome Powell came out today and said asset purchases are likely to halt in March. And the central bank released a paper outlining principles to start significantly reducing the bond holdings on its balance sheet without indicating a specific time. In the post-meeting, this is when things got very, very dicey for the markets and even the cryptos. Bitcoin at one point up over $2,500. As soon as Jerome Powell started speaking, it started going down. In fact, just a couple hours ago, it was back in the red. It's up again a little bit. Pre-markets, Dow Jones up. But again, going back to this post-meeting with Jerome Powell, he said this: the Fed could move on an aggressive path. The markets did not like hearing that. He said he thinks there's quite a bit of room to raise interest rates without threatening the labor market. Also, bond buying in February will be cut to $30 billion instead of the current $40 billion. Some more things that the market didn't like today, and I was just highlighting some notes here. Economy, he said, no longer needs sustained high levels of monetary support. Oh, that's kryptonite to the stock market. Asset prices are somewhat elevated, he said. And the final straw that broke the camel's back here is when he said the Fed is willing to move sooner and perhaps faster than last time in shrinking the balance sheet. Incredible. But, I look at this, and right now we're still at 0% interest rates. We're still printing money. I do not know why they're putting this off to March, and who knows? They could put it off even farther. But right now they're hinting at March. But they have created a mess. And if you want to know why we have a housing bubble, a bond bubble, a stock market bubble, and lots of inflation, it's because of the Federal Reserve. It's because the Fed has $9 trillion on its balance sheet, and it's buying $1 trillion plus a year in mortgage-backed securities and treasuries. This is why we have massive bubbles. This is why we have inflation. Also, one last thing, 0% interest rates. And people wonder why the economy is in shambles. They wonder why their standard of living is crumbling. They want to know why everything is falling apart. They want to know why an average house in California is $800,000. They want to know why they don't have any money saved up. Well, you print trillions of dollars and you have 0% interest rates. I'll tell you, it benefits the top 1% at the very top. And they take that money and they buy real assets. They buy houses and art and automobiles and yachts and jets, and they have lots of cash and lots of gold and silver, and they have homes all over the world. They have benefited incredibly well. Yet you earn literally zero when you put your money in a bank. And the bank charges you 25% to use a credit card while they're borrowing money for next to nothing. Think about that for a second. The hedge today, the Fed is about to drain trillions in liquidity. if they do this, and we don't know because right now it's all talk and it's a hint of this, a hint of that. Maybe something will happen in March. Maybe they're going to, stop buying as many bonds in February. Who knows really what they're going to do? Right now it's all talk. But if they begin to drain liquidity, you're going to see widespread defaults and bankruptcies in America. CNBC today, the Fed got the memo. Here's what you can do to prepare for the coming rate hike. Wow, the whole 25 basis point rate hike, which is going to cause problems because this whole thing is so fragile and we are hanging on by a thread that we can't really raise rates more than 25 basis points at a time without setting off an implosion here. What I advise, and I don't give financial advice, but one way to prepare for the rate hike, because it is going to cost more money to borrow money, right? Stop financing things. Stop financing things. People are financing furniture, they're financing cars, they're financing boats, they're financing RVs, they finance their house, they're financing their standard of living, credit cards and lease payments, rent payments, mortgage payments, buy now, pay later services. It's incredible how much money people are borrowing to live a lifestyle. Consumers will have to pay more money to borrow. A 30-year fixed mortgage right now is 3.75%. It is going to climb above 4% this year, I truly believe. Could be wrong, but I do believe that we could see easily 4.25% on a 30-year in 2022. Expect your credit card APR to go up. And remember, they're talking possibly 4 rate hikes. People are saying 6, 7, who knows? But every little bit that they raise this Fed fund rate, you're going to pay more to borrow money. Your credit card right now on average is 16.3%. It will go up this year. And I advise that you pay off your credit cards, that you pay off every debt that you have if you can, or at least get these debts to a manageable level, because the more you're paying in debt, the more you're going to get hit by the interest. People with credit card debt are going to get hammered as rates go up. CNBC, 10-year Treasury yield rises above 1.85% after Fed signals a rate hike in March. Interesting, I was at a Habit burger joint today having lunch, and I was in line. By the way, the Habit in Palm Desert, very, very good today. Prices have gone way up, but at least the food was fresh. It was good. Service was good. It was all good. But I was in line with this older couple behind me, and they were just talking to me, and one thing led to another. And the gentleman mentions to me about how many vacant stores there are in town. And we just started, kind of just talking a little bit about the economy and whatnot. And I just said, I noticed that there's a lot less snowbirds in town. And he estimated there was probably 50% less people here this year than last year. I would say, I said about 30%. He said 50. So it's still a huge number, 30 to 50% less snowbirds in the Coachella Valley in January than prior years. But we were just talking, and I said, boy, did you see the markets today? It was incredible. And, I told him the Dow was down 130 points. He goes, what? He pulls out his phone. He looks. He goes, last time I looked, they were up. The Dow was up 300, and now he couldn't believe his eyes. And, I said, did you see the bond market? I think it was about 1.74% on a 10-year earlier today. And then it just blows up. It was over 1.85%. And he's like, my goodness, I've got bonds. This isn't good. He looks at his wife, and he started getting really, really nervous. And he goes, I got to get out of this. He just couldn't believe what was happening. He couldn't believe that 1 minute the market was up 300 and then it closes down 130. He couldn't believe 1 minute that the 10-year was at 174 and the next it's at 1.85. So he seemed very, very concerned, but he's seeing what's going on. And he asked me before I left, where are you putting your money? I said, look, I'm putting my money in cash. I'm putting it in gold. And he looked at me almost like I was from Mars. And I said, look, keep your money in paper, keep your money in bonds. I'll keep my money in physical gold. God bless. Have a good day. But that's what's going on today. People just can't believe what's happening, yet they're going to keep believing in paper. They're going to keep believing in the system. And I'd rather own real things right now. And look, I don't think cash is going to be a great place somewhere in the near future. But right now I have it to buy the sales. I have it for real estate. But at some point, I think cash is going to be trash. I think cash is on borrowed time. But right now, I believe you have to have some cash to jump back into these markets when they go way, way down. You're going to need some cash to buy real estate. But again, cash can collapse. And that's why you better own hard, tangible, physical assets like gold, like silver. Article I was reading last night on the hedge, Ethereum killer rocked by outages, Solana. Again, another one of these cryptos, more glitches, more outages. We are getting into a time where we are seeing such uncertainty and such volatility, and it's more glitches, more power outages, more bank closures, more ATMs not working, and so many people like this gentleman who believe, at least at this point, still believe in the system, but they're getting very, very nervous. They believe in holding paper. They believe the digits on a screen. They believe it's all safe. I'm sure he's got a lot of money in the bank and he feels his money's safe in the bank. But he's not reading what you and I are reading, okay? He doesn't understand probably the amount of glitches and the amount of theft that's been taking place with the technology that's out there, the electronic thievery that's been taking place in cryptos. Maybe he didn't go to 5 banks last week that were closed like I did. Maybe he hasn't experienced an ATM that's been shut down for 3 days. You know, there's a lot of people out there that just don't get it. And the scary thing is with this gentleman, he was probably about 82 years old, him and his wife. What happens if tomorrow this whole thing implodes or the system glitches and he can't get to his money? What does he and his wife do? If the whole system implodes and this whole thing crashes and his whole life is invested in bonds and stocks and that's his retirement, and what does he do? There's people like that don't come back. They're too old. They're not going to bounce back. They do not have the time to recover. And there's so many people that I know and friends of friends that I have who have millions of dollars in these markets. They've got their entire 401k in these markets, their entire retirement gambling in these markets. They're living off these markets. What happens when the dip does not come back? What is going to happen when the day of reckoning hits these markets? There's going to be so many people in big trouble, ladies and gentlemen. So many people. And I want to close with this, the Fed again. I want to get back to the Fed. They are at a fork in the road. And in one direction, stocks collapse because of rising rates. In the other direction, the dollar becomes worthless as we fruitlessly attempt to print our way out of debt, which is what got us into debt. Remember, we got into this mess by massive money printing, QE, artificial injections, 0% interest rates. There is no easy way out of this mess, ladies and gentlemen. There is going to be serious pain that is going to be felt. And I don't even know if we're going to get out of this mess. I don't know. I don't know how it's all going to play out. But the Fed is running out of excuses and people are beginning to get concerned, just like this gentleman at the Habit hamburger restaurant today. Monetary policy has worked for the 1% while it's robbed most Americans. Social Security's been robbed. That's going to take a haircut in 2033. Pensions have been robbed. Your standard of living has been robbed. And we're all paying a price for this because now we have this new tax called inflation. So while the top 1% got billions, trillions of dollars, we got inflation. See, there are no free lunches and the piper always gets paid. And we're paying the piper now through inflation, but we haven't seen anything yet. We're being told it's 7%, you know it's over 15%. It's going to continue to rise. Now, Mr. Jerome Powell today said that he believes that the inflation will settle down throughout the year. It's going to come down. I don't see how that's going to play out. I really don't. But if they get aggressive, and tighten up the balance sheet, and they're not buying up all the bonds and treasuries, and they actually raise interest rates, maybe. But the problem is, if you raise interest rates 2% this year, and inflation, their inflation, 7%, we have a 5% difference. That means we still have 5% inflation. I believe that inflation is going to continue to go up, and when they finally do cut rates, we'll have more inflation then than we do now. There's no way out. They can revive the markets for a while. They can print some more money for a while. They can tell you everything is going to be okay for a while. But ultimately, the markets will crash. Ultimately, the dollar will collapse. You all know that this is a rigged game. But many people will not figure that out. They will not figure it out that it is a rigged game, like this older gentleman today. He hasn't figured it out. He doesn't understand that this is a rigged game, but he's going to figure it out. You know why? Because the inflation is going to get so out of control that it is going to wake them up out of their coma. Problem is, when they wake up, it's going to be too late for them. Then they're going to want to blame somebody. Ladies and gentlemen, boys and girls, don't be that person who wakes up out of their coma because the inflation woke them up out of their bubble. It will be too late. You know, there's an old saying, and I'm not sure if I'm saying it right, but it goes like this. 90% will wake up one morning and go, what happened? 9% will wake up and go, how did that happen? And the 1% will wake up and go, thank God I prepared because I knew this was going to happen.